I think probably most of you do know Barry Ward. He is one who, when we go out into our county meetings around the state coming up, he's one that will be at a lot of them. He and I, it kind of feels like sometimes we're in the car an awful lot together. So I'm sure we have lots of stories to tell, but in lieu of that, I'm just going to go ahead and say this is Barry Ward. He is, I'm having problems with, what is your title?
Leader of Production Business Management.
Leader Production Business Management. So that does meet the 12-syllable minimum in the department. And with that, I'm going to turn the magic clicker over.
Thank you, Matt. I don't know that this is on. Is this on? Okay. Appreciate that kind introduction, as usual. Just like to thank the dean and all the parties involved for putting this on. We do appreciate this, and it's good to see all of you. I'm not going to make any after lunch jokes about naps. If I see you falling asleep, I'll call you out. I know about half of you in here, so be careful, and you may get asked a question that you have no answer to. Okay, what I'm going to talk about today is pretty similar to what I typically talk about. Some of this is going to sound a little bit similar to last year, but we're going to address some maybe new criteria, some new topics that may be important to crop producers over this next year in terms of profitability. We'll talk first about land values, we'll get into cash rents, and we'll end the day talking about some of those input costs that might be most critical to our crop producers this upcoming year, and how they're going to manage some of those costs and how they're going to find profitability. Okay, let's talk a little bit about the big event this last year. This is the U.S. drought map as of July 31st, 2012. You can go online, you can find these maps. They're each week, and you can kind of trace the drought as it goes through the season. This was about the high point in terms of the drought in Ohio, or the low point, if you will. I'm not sure how you characterize that, but we can see that if we look at the key, we've got maroons and reds are bad. Okay, that's something that we don't want to see on this map. And you can see where we are here in Indiana, southern Illinois, Missouri, all the way out through the western Corn Belt and the Plain States. Severe drought. In Ohio, we thought we had it bad. You can see that most of Ohio is going to be in moderate to severe drought at this period. And as we move our way into August, it starts to get a little bit better for Ohio, actually. And the drought center moves a little bit to the west. There still are some areas in the western Corn Belt and in the plains that are still suffering from some severe drought. What did this make us do as producers? I know some folks had this in mind when they were getting into harvest, that we're just going to dump the combine right into the creek because we had nothing to harvest. And hopefully that's not the case in your area. But let's talk a little bit about some of the land values in Ohio as we move on. This is the National Ag Statistics Service data. We had another year of increases into 2012. We're all the way up to about $5,000 per acre. That's the average for Ohio. Okay, as we look at our survey through the department, this is southwest and northwest Ohio. This is just the western portion of Ohio. Just looking at the top and the average land values for those regions. Okay, southwest, the top land value, you can see we trace this back to 2006. Significant increases. This is not news to you. I'm sure everyone's aware of what's going on with land values, and you can see what we look like for our average values in southwestern Ohio, even average land. Projection for 2012, back in January of this year, around $6,092. Northwestern Ohio follows the same trend, just a little bit lower in terms of overall values. So this is where we are right now. Let's try to now look at some of the key aspects as far as what's going to move us forward. We do have some additional data this year. This is thanks to Elena Irwin and Wendong Zhang. And Elena is a professor in our department. Wendong is a PhD student. And they have used this data for some of their research. But I did want to highlight this because it gives us a little richer feeling for what the land markets have done in this past decade. This is ag land sales by crop reporting district. These are actual land sales, land transactions. And we can see here on the left-hand side, we've got our different crop reporting districts. If we were to look, for instance, at West Central Ohio, we can see that we have two different periods that we're looking at, two different eras, 2001 to 2006, and 2007 to 2011. If you kind of think back and try to remember when we started to see the ag boom here in the U.S., we kind of look back to that late 2006 and into 2007 is when we started to see prices increase and we saw more profitability enter that crop sector. Okay, so we're going to separate these two periods, and then we also have three different ranges of distance from the point of the land sale to the nearest city or the nearest urban center. And I believe this is 100,000 people urban center. Is that the number? Okay. So we've got some different things that we can kind of look at here, and it's some very interesting data. The one that I want to point out is this one here to the far right. This is land. These are land sales greater than 25 miles from an urban center. So we're trying, we're really getting away from some of that development pressure that we might typically see as we see parcels sold closer to those urban centers. And we can see what we're looking at here for West Central Ohio. We had 849 observations between 2001 to 2006. The average value was $3,627 per acre. And from 2007 to 11, almost 600 land sales, and significantly higher in terms of average sales price per acre, $4,158 per acre. Okay, is that in line with what we've been thinking? Well, if we look back to our chart that we saw at the beginning, our first two tables or first two graphs, that lines up very nicely. But this is some actual data that I did want to present. It's very useful as we kind of go forward and continue to evaluate what land sales are going to do here in the future. Okay? Yes?
Were those all 40 acres, 160s? Is there any size?
I don't think we had any. Did we have a minimum size, or what was the minimum size of land sale?
I think it's about 1 acre.
It was 1 acre. So,
but we have the price ranges, the price per acre between $1,000 to $20,000 for arm's length sales. So we have the price cutoff point.
we had, Windong put in some parameters to get rid of any outliers, and they are arm's length transactions, trying to eliminate some of those discrepancies or some of that bias. Yes?
Just a curiosity, I guess, North Central, 2007 to 11?
Yes.
Which the closer you were to the metro center, the lower the price. Is that a little?
Right here, 2341 versus 4310. Yeah, we have a fairly small sampling number right there, 26 parcels during that basically 4 or 5 year period. That may have some effect on that. I don't have any real good explanation for that. I don't know, Windong, do you have anything that would define that?
This is just a breakdown of value based on the ranges. So we did some further analysis. Regressions was control for other factors will pursue this.
Yeah. Yeah, this is data that we're just now kind of putting into tabular format, so we're still evaluating some of this ourselves, but I don't really have a good explanation for you as far as why that would be much lower than what we're seeing here. I suspect, some of these, the numbers that we're seeing here in terms of low observations may impact that some. Any other questions? Yeah. This is all tillable acreage, yes. Considered farmland. Okay. Some additional survey data. This is data that I try to, give you each year. We look at our OSU Ag Econ survey that we collect this in December and January of each year. This is from our ag lenders and rural appraisers and professional farm managers. It showed a projected increase into 2012, somewhere 7 to 9%. The Purdue data and the Purdue collection, their survey is conducted each year in June. And theirs showed in 2012, this past summer, a yearly increase or year-over-year increase of about 14 to 18%. Now, the one thing about both of those two surveys is we really hadn't hit any kind of drought scenario at that point, right? Of course, in June, we still had high hopes in most of the Corn Belt. The Chicago Fed, this was collected in October 1st of 2012. This is the most recent survey of most of the eastern Corn Belt. The northern three-fourths of Indiana sits within the Chicago Fed district, and this is a survey strictly of ag lenders, and their projection as of October 1 was that they still were seeing some significant land value increases, 9 to 13%, depending on which of those Indiana regions that you were looking at from last year as of October 1st. So from October 1, 2011 to October 1, 2012, this is what they were seeing in that part of Indiana. Okay? So some significant strength still in that marketplace, even this fall. Going back to kind of a common refrain from last year, most of these parameters, most of these issues really haven't changed very much, right? We're seeing crop net income has been positive. The projection right now, still positive. You know, we're still seeing balance sheets that are very strong. We're going to see a lot of crop insurance pay off this year to help bridge some of that income gap that we've seen in the last 3 or 4 years. All right, we're still seeing outside investors looking at farmland as a potential opportunity with a shaky stock market and other investment vehicles really uncertain. Farmland has been one of those investment opportunities that still continues to create some returns. Low interest rates, you know, if I had to rank these, I probably would have put this second behind crop profitability. Low interest rates certainly impact land values, and we'll show why as we look at kind of an appraisal approach to valuing farmland. And then we look at local land supply. Still continues to be fairly low in terms of the land supply on the market. Now, that may have changed a little bit in the last 6 months. Talked to many people in the last 6 months that, you know, find that farmland in their area maybe has increased in sales velocity. That land that's coming to market, people uncertain about capital gains, tax increases potentially this next year might be spurring some of that land coming on the market. So we'll go back to some data that Wendong and Elena have provided. This is some data from Western Ohio, taking a look at the turnover rate in land over the in that same period, 2001 to 2011. Is that correct? Now, this is per annum, right? This is per year turnover rate. And we can see what, you know, as you look for one thing at the blue, northwestern Ohio, less than 0.5% of the land being sold on the market each year. Okay? And we can take a look at the red, 1.5 to 2%. Delaware County sticks out right there. A little more land turnover in that county. And you can see what the rest of the data looks like. If you get down here into southwestern Ohio, fairly low turnover rate, 0.5 to 0.75% per year. And, you know, that kind of jives with some of the numbers that we were talking about. Fairly low land supply. Now, we take a look at it next by year. And this is going to give us a little further illustration of maybe why some of the land values that we've seen have been exacerbated by some of this low land supply on the market. We have more dollars chasing fewer acres on the market, and we can see what's happened since 2008, basically, into 2009 and 10. We don't have the 11 data on here, but my expectation would be that would be pretty similar. And you can see what we're seeing here. Total number of transactions, and this is per year. So that number did decline significantly Lots of theories, on why this has happened. Many people found higher return on that farmland, for one thing. They had better profitability, so they're going to hold on to that, maybe retire a little bit later. Some of those folks were just waiting for that bull market to run its course and still waiting. Okay, so that's why some of that potentially was held off the market. Questions or comments? Okay, anything else to add? Thank you, guys. This is very good. Let's take a look at returns, okay? Had that list of factors that were driving land values, and it's the same factors that are going to be driving cash rents, as we talk about rents here in a little bit. Okay, this is our projection for 2013. Now, key parameters. What are we going to plug in for 2013? First of all, price. Okay, what is price going to be? Well, right now, we look at forward contract prices for next October, November delivery for corn in Ohio, right around $6.15. Okay, 158 bushel. That's the trend yield. If you go back to 1970, use the NASS data, 1970 to 2011 or 2012, our projected yield for Ohio trend yield shows about 158 bushel to the acre. Okay. Now, some areas obviously are higher. We've got a couple of different yield scenarios plugged in here. If we include, now again, this is a little confusing. You can go to our website, pull off our enterprise budgets. That will give you the complete list of costs. Okay, I don't include them all here just for presentation purposes. It would just be far too cluttered. Okay? So what we're doing here is we're going to show you just a few key costs, pulling them out for presentation purposes, but our returns are based on if we were including all of those costs. We look at all of those costs, and then we look at our return to land down here at the bottom. This is what we have left over after paying all costs, including some kind of operator labor and management, and what we have left over to pay rent or some kind of servicing land debt. Now, as we look at the price, potential yield, the cost structure that we have right now, and we've got some pretty recent fertilizer prices and other input costs that we've increased a little bit, nominally, some of those 5 to 10% from last year. We still see we're expecting the potential for very good profitability. Okay, $350. If we have maybe higher yields, somewhere close to $500. We continue to ask, how can we see land rents across the Midwest escalate? Well, this is the reason. We've had most years since 2007, we've had potential for close to this. Okay? That's not news. I know everyone's aware of that. Maybe your numbers look a little bit different than mine. And we're going to plug in a little different number here in a moment to see what that looks like in terms of land values. Okay? What do soybeans look like? Remember this number. I'm going to contend here in a second, and the numbers will show it. Right now, corn looks like king that's going to be the king again. Okay? As far as profitability, right now, with the cost structure, with the prices that we have, here's soybeans. $12.70. That's about what our forward cash prices are for soybeans. 46 bushel yield. Returns to land are lower. Okay? Right now, it does not look like soybeans are as competitive as what we thought, maybe about a month and a half ago. Price ratio has changed somewhat. Okay? What does wheat look like? Now, remember this number. Wheat, for the first time here in several years, may look like the second best option. Okay? Soft red winter wheat, forward sales in Ohio, around $8.45 for next July, September. Now, this does not include any straw sales, any double crop soybeans, so this number could look a lot better if we are, especially in the southern half of Ohio, where we have the ability to plant some double crop soybeans. Okay? So wheat, potential. If we take a look at an appraiser's approach to valuing land, the net income method of capitalization, we're going to look at that return to land. We're going to look at the interest rate or the cap rate. We're going to use the 10-year T-bill rate. And I'm going to go back here. What is driving land values? Low interest rates. The 10-year T-bill rate as of Friday was about 1.62%. Okay? As of November 30th. The low this year on July 25th was 1.43%. The high, 2.39%. So, you know, we're bumping along below 2% right now. If we take a look at this appraisal approach, return to land from corn, the present cap rate. You know, Mike Weasel is suggesting that we pay this much for land in Ohio. I don't know. He said that earlier. Huh?
That's on the low side, Barry.
That's the low side. Okay. He gets commission, I think. Obviously, this is probably a little bit higher than what we're going to pay for land in Ohio. What's the high water mark that you've heard? And it's in Iowa. The latest number as far as land sales, farmer to farmer. I heard a higher one than 20,000.
Recently brought over 20,000.
Yeah. Okay. I heard the 20 last year, and then there may have been one 21 or something in that range, right? So.
Sioux County, Iowa, gets over 22 here.
Over 22. Okay. Okay. So that's a high water mark that I'm aware of as far as Midwest land, farmer-to-farmer sale. Now, that's not to say that that outlier plus this information here is going to spur us to go out and bid this kind of amount for farmland. We start to maybe put some more realistic numbers to these equations, try to get some idea of where land values should be. Now, one thing that will probably continue to spur us this next year is this return to land, positive profitability. We have farmers with very strong balance sheets, and that's going to continue to drive land values in local communities as well. Okay, so let's take a look. We've got our corn at 6.15. We just showed you that. If we look and plug in 4% as our cap rate, maybe a little more realistic long-term interest rate in that equation, we can see that numbers come way down, right? Only $8,000 to $12,000 per acre. Okay, and we know that there have been some sales in western Ohio, western tier of counties there in Ohio that may have seen some 5-digit land sales, but those are, you know, still tend to be kind of the exception to the rule. We take a look at the soybean numbers, and we plug some of those numbers in. Those are our returns to land for those 2 yields of soybeans that we had in our budgets. One cap rate and then the higher cap rate. We start to see numbers that might look a little more realistic for Ohio acres, maybe going out into that medium term. Let's take a look at plugging in a little different number for this next year. And maybe this represents maybe a longer term corn price. Some would argue that might be lower, might be more of a $4.50 as an equilibrium corn price going out 4 or 5 years. But for the sake of argument, I'm going to plug in $5 per bushel. Okay, this may be 2 years down the road if we do produce some corn next year and we don't have a drought situation. What's the return to land look like? Well, it's quite a bit lower. I have not changed any cost figures. Potentially cost numbers could come down in this scenario. But just for the sake of argument, we're going to plug $5 corn in, look at return to land, and then we're going to do some appraisal math on these calculations. And we can see at the 1.62% cap rate and the 4% cap rate, this is the number we'll look at here at the bottom. You know, where are we at in terms of land values in Ohio right now? Well, we're not too far from this. You know, some of that top land, if we look back at our surveys in southwest and northwestern Ohio, are right around $7,000 per acre. Now, we have some parcels that are selling for more and some a little bit less, but we're not too far off that. So at least, you know, present economics, we looked at a 1-year snapshot. We certainly could support higher land values, much higher than we're paying on the in auctions right now. And with maybe a little more medium-term outlook, still supportive of maybe close to where we are right now. You know, my outlook for this next year is probably going to see continued pressure on land values, probably another, 5 to 10% uptick here in Ohio. Luther?
Do you include property tax?
No, yes, on this, yes.
What was your question?
Do we include property tax? Now, I didn't on these particular calculations, but I typically do. But yes, that's going to impact that by possibly a few $100s as far as those calculations. Average property tax in Ohio is still probably $15 to $20 an acre. We know that's certainly increasing every year. We get lots of discussions about property taxes. But we need to include that as we do those calculations. For this particular exercise, I did not, Luther. Now, one could argue that, what we include here, and as you start to evaluate our budgets, most of your commercial, large-scale farmers in Ohio are probably going to do better than this, better than $5.15 break even. Now, this is supposedly for, an average farm in Ohio. So this number is certainly going to look better to those larger commercial operators. Those numbers are probably going to be higher. Okay, questions or comments? All right, I'm going to move forward here. Just to illustrate the kind of the validity of using these calculations and using a cap rate approach, capitalized values, and we look at some data out of Illinois, the actual farmland price in blue, and we look at that return to land, and we look at the capitalized value of that in red, and they follow pretty closely. Okay, we tend to see that as a fairly high correlation. What are some factors that could negatively impact land values? Well, there are a few, and I think you're mostly aware of those. We're going to probably see a large planted acreage again this next year. Going to continue to see pressure on the marketplace if we do have good weather, right? If we do make it through July or even part of August without a significant drought pocket or significant weather issues, we're probably going to see prices fall back a little bit. Now, Matt will talk more about prices. I'm not going to get into that much. We're continuing to see, as Ian and Mark have talked about, global economic issues. Continue to see some malaise in the market worldwide. Profit margin erosion, lower crop prices, higher input costs. As we continue to see these high returns to land, high net returns, we're going to continue to see those input costs inch further upward. What's going to happen is that if those profits aren't bid out in terms of typical inputs, fertilizer, seed, chemical, it's going to get bid into land in terms of land value or land rent. And higher interest rates. I don't know that we can go much lower. That's something that we're going to definitely see. How soon? I don't know. Cash rents. Let's move on to cash rents. This is, again, Western Ohio. This is our survey that we've been conducting for the last several years. It showed another uptick in cash rents. You can see that we have Southwest and Northwest. Those are the top cash rents in terms of average. These are the average land classes for Southwest and Northwest Ohio as well. We can take a look at what's going to drive this. Again, we're going to go back to that same budget. We're expecting cash rents to see the same pressure as what land values are seeing, continued upward pressure. Let's take a look at what our survey showed this past year. For Western Ohio, we include just this. This is lumping Southwest and Northwest together. We take 3 different tiers of land class. Top, average, and poor. Our top land right here, this is land that would typically yield about 193 bushel corn. In 2011, our average was somewhere around $229, $230. Now that range is wide. The expectation for 2012 was that land class was around $250 per acre. And our expectations would probably be to see another 5 to 10% increase in cash rents this upcoming year. We don't see this slowing down, even in the face of some of the drought pockets that we've seen here in Ohio. Now, those areas that were most severely hit, they may experience a little bit of a lull in increases, but our expectations are not to see a lot of slowdown in this upward increase in cash rents. So how do we manage these? You know, producers are always asking this question. You know, first of all, we need to be at or near the market. We need to make sure we're communicating with landowners about those non-cash benefits to them as the landowner. You know, what are those? What is the value of those services that you provide? And maybe that's something that needs to be written up. Maybe that needs to be something that's more formalized in the lease agreement itself for those that have written leases. And that's still a continuing process. The majority of leases are still oral leases here in Ohio and across the Midwest. I'm going to talk a little bit about some flexible cash leases. And, you know, the last one, and I think this is key, and most producers, I think, are prepared for this, those in the crop production sector, is to make sure that they have as strong a balance sheet as they possibly can if and when we do find a reversal in some of this profitability. Okay? And that's probably going to be a little bit of a shock absorber for these folks if we do encounter a price that falls to $4.50 per bushel for corn maybe in a couple, 3 years. Okay, let's talk about I want to talk about two specific flex leases, two examples. This one we talked about last year is a cash lease with a bonus approach. I'm going to talk about a couple that are maybe a little simpler, but they probably are also used the most in many areas of the Midwest because of their relative simplicity. They're still not as simple as a straight cash lease. They're still not going to be the overwhelming choice, but we still continue to see these flexible cash leases increase in their usage here in Ohio. So we have to look at a base rent and possibly a ceiling, some kind of a max rent, a base gross revenue. It may be the cost of production. That may be an easy way to get to that, what that base gross revenue should be. We have to come up with some way to verify our actual year-end revenue, some kind of a price and yield verification, and then how is that going to be shared? Our example is such here. We're going to come up with a base rent of $195 per acre, a base revenue of $825 per acre. The excess revenue, or that's above and beyond that base revenue, is going to be shared 34% to the landowner. We have an actual revenue in that year, and we can see what the bonus is, simple math, in our total cash lease. Now, this might ignore some of the real impacts of increasing input costs. It does leave some of that out, and that's a weakness of this. But you have to weigh the relative simplicity of this method with with the ability to get your landowner to participate in this kind of an approach. Okay, another method is just simply a percent of gross. Okay, where we're just taking the gross revenue. We have a certain percentage that we're going to multiply based on the type of crop. And this is going to vary by crop. Typically, we're going to find, here's our example, corn, that percentage somewhere probably between 25 and 33%. Soybeans, probably 35 to 45%. Those are wide ranges, but each farm and each landowner agreement is going to be different. Here's our example. We've got a base rent of $195 per acre. We've got some different percentages here as far as how we're going to multiply those out. The important thing is, and the most difficult thing is our verification of yield. How are we going to verify yield? So that may include some kind of weight tickets. It might include yield monitor data. And it might require some backup verification by using crop insurance information. Okay? Landowners are becoming more and more aggressive in what they're asking from the tenant farmer in terms of information. We go west of here, especially, We're seeing leases that include yield information, soil test information, and other things that are required information from tenant to landowner. Okay? This gives them a little bit more information with which to base further negotiations, and some tenants that aren't willing to provide that are shown the door. Okay, we don't like to see that. Long-term stable relationships are what we like to see. And I think that tenants, those farmers out there, have to realize that more and more of that information needs to be shared. Here's a couple of websites on cash lease resources. I'm going to spend the next 4 minutes talking about crop input costs, and real briefly, we expect to see some kind of nominal price increases on most of these. Energy, not so much. Fertilizer and seed, I should say seed chemicals, those number 3 and 4, we're expecting to see in the neighborhood of around 5% increases. Now, one thing that we've seen in the glyphosate market, we're still seeing significant increases in glyphosate prices here in the U.S. We don't know, the full impact of what's going on in China. China still holds the overwhelming excess supply capacity for glyphosate in the world. Okay, one thing that we're not sure of is how much production they've actually shut down and how much is still there to be used, and whether or not that's the case or whether or not we're actually seeing some kind of a top to that supply, whether we're seeing the up end of that supply capacity for Chinese glyphosate production. We've seen glyphosate costs increase about 50% over the last several months. Okay, we've gone from about $10 to $12 per gallon of generic glyphosate, upwards of $14 to $16 per gallon. So that's, it's still going to be fairly minimal in terms of cost, but it is, it's going to impact us. Okay, the one I want to talk about the most is fertilizer costs. Real quick, energy costs. We're expecting to see flat to lower energy costs. Here are the current fertilizer prices for Ohio, flat to lower from last year at this time. About a 5% increase in ammonia. The rest of those are a little bit lower. Nitrogen. I've got pluses by those factors that might increase the price of nitrogen going into this next planting season. The negatives, those factors that probably will lower or potentially lower prices. For one thing, high crop prices are going to certainly be the major factor. Large corn acreage prospects for the U.S., strong balance sheets. Farmers are not hurting by any means. They still will be able to afford and should afford the most optimum fertilizer usage. And low domestic gas prices. We've got more domestic in production coming online. Phosphorus, just real quick, the same factors with phosphorus and potash. The one major factor with phosphorus and potash that potentially will keep these fertilizer prices in check is that we've got still a lot of residual P&K out there that growers are counting on and might restrict or might pull back some of their applications going into these winter and spring months. So I'll finish there. Although we had a bad year, most of the producers, except those in Champaign County, are going to have tractors that probably are running on 4 wheels, but we love to poor mouth ourselves, as farmers, and I think, I have no direct evidence yet, but I'm sure we were the worst off in the whole state in central Champaign County. So, this is what we're going to be looking at in Champaign County this next year. Yes, Howard, one question.
What kind of inventory is here and doesn't have to come up the river on inputs?
Well, we don't have a real good number for that. We don't have retail establishments that have to report. But, the feeling is that there is significant inventory still out there in the retail sector. We see some disconnect between the retail costs right now and what's going on down in Florida, down in Louisiana, as far as those prices. We've got Mississippi water level issues. We might have trouble getting barges up this winter. That's certainly a factor. Those prices are going down. What we're seeing at the retail level with most of our products at most outlets is that those prices are remaining fairly steady. So there could be an impasse, there could be a bottleneck this spring. We don't expect that to be very severe unless we continue to see some of these Mississippi River problems. Yes?
What percentage of Ohio's agriculture is irrigated? Ohio's ground, tillable ground?
Oh, boy, I don't have that number. I think the question was, what percent of Ohio ground is irrigated? I don't know. I think it's probably less than 2%, probably less than 1%. But, I don't know if, I don't want to put anybody on the spot. Does anybody know that for sure? Okay. Well, thank you for your attentiveness and appreciate the opportunity. I'll turn it back over to Matt.